Bear with me, guys. I'm having a little problem with this new software that I'm using to stream this. Keeps reconnecting and keeps disconnecting and reconnecting. So bear with me, guys. I'm having a little problem with this new software that I'm using to. But so let's try and do some market analysis while we wait for this trade. Yeah, let's look at what the markets are doing. Starting with the euro dollar. As always, I'm gonna go over to a much higher time frame. Actually, let's start with the daily time frame. Now, this is an area that we kind of recognized yesterday and said the market is coming back to that area. Now we can see that we've clearly broken that area. And if you guys can remember what I always keep saying, that breaking the structure doesn't mean anything. It shouldn't be a sign for you to take a trade, because I can guarantee that this market 9 times out of 10 is going to take a breather. It's going to take a pause and go back up before it makes another move down. But you also have to remember the fact that this market on a higher time frame is still bullish. Nothing has changed. I mean, looking at based on the fact that we've had this impulse leg anyway, I would say that the market could, but I mean, let's have a look at the weekly time. The weekly time frame tells you a different story, though. The weekly time frame tells you that this market is bearish. Oh yeah, I know the trade. I mean, but it happens. It's one of those things where you have to just take it and move on to the next one. But there was always a risk of that happening because the market was trending, so it was bullish. The market has been bearish for the last 3 days, and but at some point it's gonna correct itself. I don't expect the market to keep. Okay, I need to mute this side. I don't expect the market to keep going down. At some point it's gonna correct itself, and yeah. So as I was saying, euro dollar higher time frame suggests that the market could be coming back down. I didn't even look at the weekly time frame yesterday. I just focused on the daily, focus on this impulse leg. But obviously looking at the market on a weekly time frame, we can see that the market, this is just a corrective pattern. This is the bigger impulse leg to the downside, and this is just a corrective pattern. For those of you that are familiar with wave analysis, what do you call this? It doesn't look like a flat, probably irregular flat. I don't trade wave analysis, but yeah. So it looks like we're getting a correction here, corrective pattern, and so the euro dollar could be heading down, which is kind of true based on the dollar index. If you look at the dollar index, we've seen how the dollar index has been setting record highs, really. So that we looked at the dollar index yesterday. Where is the dollar index again? Let me have a look at that. It has clearly broken the structure, and give me a second. I need to find the dollar index. It doesn't look like. There it is. Yeah, so as you can see what the dollar index is doing, and we had a nice huge green weekly bar, and if that weekly bar closes where it is or anywhere where it is, then we can expect the market, like I said, we still not, I mean, we still have a couple of structural points that we need to kind of overcome. There's one there. There's one there. I mean, we've just recently gone above these two structural points. And yeah, and again, looking at the dollar index on a higher time frame, going over to the weekly, we can clearly see that the market is bullish. It's a bit choppy, actually. But yeah, in terms of the dollar index, I mean, like I said, you just have to pause, man. Every single time the market breaks the structure, you should never try to rush into. Um, yeah, the dollar index is at the moment it's very bullish. I mean, look, depending on what time frame you're looking at. I mean, if you're looking at a 4 hour time frame, it's totally bullish on a 4 hour time frame. Um, but my concern is this recent structure that we've broken. This structure that we've broken recently. Just expect a pause, because if you just look at all you have to do sometimes is look at the previous times that the market has broken structure, and just to observe what the reaction has been. Yeah. So look at on this case scenario. This is just a simple structural reading. We have this situation where the market has set a new structure level here, came back down, went back to the same structure level, didn't break it, came back down, went up, broke those two structural levels. You see what happens? Straight away the market came back down completely. Now this doesn't mean, like, to the market, after breaking this structure, it's going up. However, it's never gonna go up in a straight line. It's always gonna take a pause, and this is a huge dip. A lot of people can get trapped in this. After the pause, then it's gonna come back and continue going to the original direction. Same thing that we're getting here. The market has broken this structure now. You would get this pause. You will get this market pausing. It can go deeper than this. It can go just a little bit of a pause, and then we're gonna continue. So always wait for the pause before you go long if you're gonna trade the dollar index. But yeah, this is just a simple. If you look at every single structure in the market, just observe what the market does every time it breaks a structure, and you're gonna see a huge clue there, because that tells you a lot. That tells you a lot every single time. Even on this little things that we're seeing here, 5-minute chart, look at the structure here, bearish structure here. But before we got there, the market came back down, set a structure level here, went up, broke the structure level. It didn't go down. It retraces back up. But on the process of retracing back up, it has broken another structure level. This is where we're getting another retracement here. There's always going to be a reaction. Obviously, we're looking at it on a 5-minute chart. The reactions can be, but market breaking a structure level is always going to take a breathe, always going to take a pause. It's always going to retrace. Most times than not, we're talking about, you're only going to have certain situations, certain scenarios where the market hasn't retraced to after breaking a structure. There's very, very few scenarios where the market will break a structure and not give you a reaction. And with this market, it's just a matter of time before it resumes its downtrend, the GBPUSD, because I really think this market is gonna, based on what it's done in the last couple of weeks. But see what I mean, the situation again. Look at that, this move. Market has set a structure level here, and we've broken that structure level in the last couple of days. The market will not just, it's gonna take a breather. It's gonna retrace, and then if it goes back down again. So those are the clue. So with my day's trading strategy, as long as the market keeps giving me, as long as my strategy keeps giving me a long trade, I'm gonna keep taking long trades on this market. I don't care what the higher time frame. The higher time frame tells me that the market is heading down. I don't care about that. If my strategy gives me a bearish trade, I will still take it. If regardless of what direction my strategy gives me, I will take that trade. I've got my RSI, but I don't really need my RSI. So yeah, let's see what the market is likely to do today. I really don't want it to go up from here. Wait until at least 1 o'clock. I'd like to see this at 1 o'clock before it takes off. We're 20 minutes away from 1 o'clock. So far, I think the market is doing something I want it to do in terms of, like, compared to yesterday. I mean, yesterday it's just been in red all day long. So am I going to add more positions? Yeah, at 1 o'clock, if the market comes back, that's why I've got this line here. I would want this market to be anywhere near my entry at 1 o'clock, and then I'll add more position. Now, because of my drawdown, normally on a trade like this, the position I'm gonna add, based on the strategy, will be twice the position I already have. But because of the drawdown I've been through yesterday, like I said, I've got to, control, I've got to use a proper money management or risk management. Yeah, because it's not about trying to, there's a huge lesson that I want a lot of people to learn from this. Yes, I only trade GBPUSD. That's the only trade you're ever gonna see from me. Only GBPUSD, because the strategy I'm using is a strategy that has been back tested and used only on GBPUSD. And that strategy kind of understands the behavior of the GBPUSD on a daily basis. There's over 2 years of charts and everything I've analyzed. So yeah, I don't think you can use that strategy on any other currency pair, simply because it's not gonna you're not gonna get the same results, because the markets are volatile at different times of the day. Like the GBP USD, you expect that to be volatile during UK and US sessions, and obviously if you're looking at the Aussie dollar, for example, you expect volatility to be during the Asian session and some volatility during the US session. So you can't really, I mean, that's one of the reasons why you know I think it's a good thing to do if you try to if you're trying to keep your strategy very simple, try to understand and learn a strategy. Um, Unless if you have a huge capital, you can diversify your portfolio. You can explore other markets, you know. But I would really advise people to just keep it simple. Focus on understanding a particular, because these currency pairs, they have the same, they behave, you know in a similar type of way. It just depends on the time of the year, and obviously fundamentals also play a part as well. If there's a huge fundamentals going, it can drive the market, causing more volatility. But generally, they have a similar pattern of behaving. So it's all about trying to understand that pattern and try to obviously explore it. So yeah, 15 minutes to 1 o'clock, and let's see. Like I said, with this trade today is a lot more easier to see, how to kind of to know when I don't need to be in a trade, as opposed to yesterday. Yesterday when I took those trades, and I was really, just waiting for that reversal that I usually get as we approach New York or after New York. But in this case, I don't need to wait for that. If the market just goes down and break this level, then I know the trade is done. Really, you won't see me in the trade. However, I said in the next 15 minutes, if I get this move back down to where my entry is at 1 o'clock, then I will be adding to my position, because I expect this move to happen. As I don't look at this as this is not a guide. This does not tell you when my profit or my stop loss. Or as you can see, if I bring up my account here, I don't have stop loss or take profit level. I don't use those. This is just to tell you which direction my trade is. And also, I like using TradingView for my analysis, because TradingView kind of gives you the charting platform is a lot better than most. I haven't used every single platform in the world, but I can tell you that if you're a trader, if you use TradingView platform to do your analysis, I think you will stick to that. I don't think you ever use you. I don't think you'll ever like any other platform. Um, because they just make everything so smooth, so easy to use. And obviously it's going to depend on the type of subscription you have, but they do have a if you don't need a subscription to use it. Actually, I think they do have a free version, but the free version just comes with a lot of adverts and stuff on the chart, so it can be a little bit annoying. But yeah, that could be a reason as well. That could be a reason, because Hackman's point of view says the reason you don't have stop loss is because you're actually monitoring your trade. Yeah, that could be a good reason as well. Uh, but also because I do understand in terms of like knowing, because there's something that's very very like important to understand in this strategy. And like I said, obviously, a few weeks or months down the line, I will start explaining the strategy a lot more. But there's one key thing that has an impact on this strategy, and that is the average daily range. So average day is so important to know the average daily range. So important to know what the market is likely to do on a quiet day. So I know the market, I know the range that I need to be. I know, so that's also one of the reasons why I don't usually use stop loss, because I know exactly what the market, in terms of the range where the market is going to be on a daily basis. So the weak cable is connected to the crisis and driver shortage that has affected supply chain oil. Yeah, you're definitely right. That's one of the reasons the cable has been weak. That's one of the reasons pound has been weak. It's because of the oil crisis. Um, but yeah, that's all. This is what happens with the market. These kind of things, when they happen, they have a huge impact on the market for a day or two or maybe a week. And then after that, even if the crisis is still going on, the market will recover. The market will, I don't know if you remember back when we had this pandemic when it started last year. Um, Obviously, we had the pandemic when it started last year. The first few weeks of the pandemic, you can see how the market were crashing, especially the US indices. The markets were crashing a lot. But obviously, the pandemic went on for more than a year, and it's still going on. But you've seen how the markets recover. So just because you have the bad news or fundamentals only have a short-term impact, they don't have a long-term impact in deciding which direction the market is going to go. That's why for me technicals will always be, even though I would, you know, there's no shame in using both of them, but your trading should be more technical than fundamental, if that makes sense. Because like I say, fundamentals just have a short-term impact. It doesn't. I mean, if you look at a market, a particular market that's bullish on a daily or weekly time frame, no matter how negative the news is, it's only going to have a short-term bearish impact on that trend. It's not going to automatically change the whole direction of the trend. So well, I see. I look at the weekly range. Yeah, it doesn't. You can look at any range. You look at it. It's anything that you can do to help you understand the market a bit better. You can do that. Anyway, let's see what the market is gonna do. 10 minutes to 1 o'clock. Yeah. So, like I said, if this market comes back to where I had my entry, anywhere near 1 o'clock, I will be adding to my position. And we're just 10 minutes away from 1 o'clock. So although I need to be careful because this one of the patterns that I do day trade with on the GBPUSD has a similar look of this pattern where the market would rally post the UK session and gives you a deep retracement, and then for that the market can just trend downwards for the rest of the day. Like I've seen patterns like this a lot of times. Actually, let me see if I can. I'm gonna show you guys that pattern. Just let me copy that. And let's see. I think I'll find out those patterns. I'm gonna show you guys. I'll try and show you at least a couple of those patterns because I've traded those patterns before and they even haven't happened back to back. So this is the two patterns I'm talking about. You can see this post UK session. You see this rally, the market give you a deep retracement and then trade it downwards for the whole day. And the second time we've got the pattern here as well, a rally, and the market give you a deep retracement and then trade it downward for the whole day. So that happened 2 weeks ago. So I'm saying that this patterns, but obviously it is totally different from the one I'm trading now. And I'm aware that could happen. What is wrong with this, man? This is a little bit not receiving enough. What? Excellent connection. Why am I receiving error with this one? Anyway, so unfortunately it's almost 1 o'clock and I didn't really get the chance to add to my position because the market seems like it's going up. So and I'm not really interested in the one position that I have open because it's yeah. So this is likely gonna be a short stream today. Um, do you see the market breaking the 136.70 resistance? You're talking about GBPUSD? Let's see. 136.70. Wow, this is so here you're talking about this resistance. We got resistance here as well. You have to look at this as a structure as a whole. And based on what this market is doing in terms of making a bearish structure, this is your outside return and this is your new structure low. Now this market is free to retrace into any level from in here because we're looking at the 382 retracement. Yeah, so the market is free to retrace into any level from there, so you are going to get that retracement into that level. Now it can go, I don't think we're going to break that the level I need to I'm going to tell you to watch is probably the 137.50s, around 137.50s. That's the level that the market I don't think is going to break. But yeah, it could get to 136.70, the level you mentioned. Look for 50-minute time frame. Okay, 1 second. Oh, you're talking about this level. No, I don't think the market is gonna break that level. I don't think so. Because if you look at, one second, let me just delete this. If you can look at this huge move that we've had with no retracement whatsoever, that's around about 320, 312 pips. And the market can retrace at least half of that, maybe even a little bit more. But the market can retrace at least 160 pips, 150, 100, and it can retrace at least 160 pips. So I see this market coming back to at least that level. Let's say 170. I see the market coming back to at least that level before it continues the downtrend. So now I'm not saying that that level is gonna be right now. I'm not saying the market is gonna bounce back and go to that level. No, there's still a lot of trading left before the market, because you have to remember, when the market is correcting, it takes its time when it's correcting. Because if I tell you the market is gonna get there now in the next day or two, that's that it took a day or two to make this move. It's not gonna take a day or two to retrace back to that level. That will take probably a week, because there's still a lot of trading going there. The market will come into a consolidation here. The market will come into a consolidation here. Maybe it's gonna go up slowly, get to that level, and then it's gonna continue the trend. So this could take up to a week. And if that happens, then that downtrend is more or less guaranteed that the market will continue that downtrend. And obviously the market hasn't decided to give me my it didn't give me my second entry. So at 2 o'clock I will be closing my first position. um, because normally, like I said, 2 o'clock, 2:30, the market, once we get into the New York session, then we can expect some kind of a there is a chance that this market could rally there, and then when it comes to New York session, we're gonna get a complete reversal back to retest the lows. I think there's a chance that could happen. First, again, one of the patterns that I trade is is based on that kind of movement, and I can show you a couple of trades in the last couple of weeks where the market did exactly that. It will rally up until the 2 o'clock New York session, and then it reverses the trend completely. You have to know that right now the market could potentially be going into a corrective pattern after the move we'd had the last 2 days. 312 pips. The market could be going into a corrective pattern, and so you can expect choppy sideways movements